Think all the way back to 1 year ago. If I told you that I had just traveled back from the future in a time machine made from a DeLorean, all the way to the year 2020, where I witnessed Great Depression level unemployment, widespread civil protests in the streets, and nearly 200,000 Americans had died from a killer virus with no cure, you'd probably ask me if Biff Tannen was president, which he kind of is, I guess. But what if I told you at the same time, the stock market was at an all-time high, housing prices were skyrocketing, that the government was mailing free money to everyone, and that the banking system somehow figured out a way to show me the money, print unlimited money. I mean, you might want to jump in that DeLorean with me and, wearing a mask, of course, and start investing. But how long can all of this last? Is this something that is going to be affected by the election? Is it caused by the election? So today on Dumb Money Live, we're going to reveal the stocks we're trading into this election cycle housing boom and how the election could change everything. This is Dumb Money Live with Chris Camillo, Dave Hansen, and Jordan McLean, streaming live on YouTube. We are Dumb Money. Hey there, Dave here along with Chris and Jordan. Welcome to Dumb Money Live. I just got back from the year 2020 and you are not going to believe how cool the Pepsi bottles are in the future.
Where'd you get that Pepsi bottle from, Dave?
You gave this to me as a housewarming gift.
Yes.
Authentic
future,
prop
man.
from...
Is that Back to the Future 2, right?
It was Back to the Future when they went to the future. Not 2020, but all the way to 2018, I think? 2017.
I'm glad to see you didn't sell it on eBay and you actually kept
Oh no,
it.
I
That
keep
makes me
this, and
feel
it's
really
actually
good.
normally back in this this fake shelf of stuff that I would normally just have out.
That's your favorite movie of all time still,
Of
right?
all
To this
time.
day,
That's-
is it your number one?
It's absolutely my
Number one.
favorite movie, and I actually try to watch it at least once a year. But
Awesome.
anyway, we have two things going on right now. The stock market and the real estate market are on fire.
Mhm.
Not all real estate. Commercial is still a complete mess, but residential homes are skyrocketing. So a few things to frame our discussion this morning. Is the election fueling this housing boom? What are the other drivers? What are the different ways we can trade this? And we will reveal our personal picks. Okay, so let's start with that. Is the election fueling this, or is it something else, or is it a combination of all of the above?
I think it's a combination. And when we did our election, we promised that we would do a deep dive into every aspect of the election trade. And obviously today we're covering this home surge. This is just the start. It's like the perfect storm, right? There's very little inventory on the market, right? All of a sudden we have everyone has staying at home all the time. So they're thinking about their home, their vacation home. Maybe they don't have a home. They have an apartment. They want to get in a home, right? And so there's this.
And you also have people who were in cities that want to go to the suburbs, go to the more remote urban, moving to suburban.
Right,
that's a
work from
huge
home,
trend.
So like you can actually be anywhere you want to be now. So why just take advantage of that?
But how about this? Record low interest rates. And Joe Biden potentially, we have no idea, Joe Biden potentially coming into office, if he gets elected, has basically came out and said that housing is a big part of his plan. He wants to subsidize and back mortgages, get more people into low-cost housing. So that could be a major tailwind if it looks like he has a shot at winning this election. And I think that would be like 2.0 of the housing boom. We're in like just started 1.0 right now. That would be 2.0. And guys, when the housing boom, they don't just come and go every 6 months. We go through cycles. This is the beginning of this massive cycle because we've had a rough 6, 7, 8 years in terms of housing starts, right? That we're just now starting to come out of this last year, 2019, coming out of it. And now it looks like we could be in for a multi-year run.
It went from a really kind of a slow housing and especially with the builders to all-time highs. What is it? The builders index. There's like this bank index that tracks the sentiment of the builders. It is at an all-time high right now. And that's causing all kinds of things to happen. Lumber prices are out of control. So let's talk about the different ways to trade this boom. And let's start with the builders,
without talking
right?
about stocks. Don't talk about stocks. Let's talk about the different ways to trade it, and then we'll dive into the stocks and our picks.
So,
okay, guys, what do you think?
So
what are the ways?
I was going to say, start with the builders, and there's those builders that are building lower income, which could be benefited from a Biden presidency, the traditional builders, the luxury builders. There was a lot that they tore down the house like a year ago, and like last week, the tractors came in and started pouring the foundation for it, right? It's happening all across the country. There's such a small amount of inventory of what do you call a pre-owned house? Traditional existing houses that people sell and someone else moves in. I don't know, like a used house.
Is that peer-to-peer home sales? I mean,
but there's we're at an all-time low for the availability of existing homes on the market. Is what I'm trying to say.
And what do you need to build a home? You need lumber, and lumber is hitting like crazy all-time highs right now. So the lumber companies are something that we're going to talk about in this show. Also, what do you need besides lumber? Roofing, siding, insulation. So there's a whole host of companies that do that.
All of the components that go into a new house. Large appliances. I mean, Chris and I both...
Most people are going to have to get a loan, right? So you've got some of these, and you probably don't want to go with the bank because banks are in trouble right now. So you can go with some of these non-bank mortgage companies.
The hottest new trend is non-bank mortgages. I've never done it, but I can tell you for sure I would.
Trade for us this summer, right? You said large appliances. Whirlpool's a huge trade already. But what's your favorite, Dave? How do you like to play? You're so boring when it comes to stuff. But what is your favorite way to do this?
I'm boring. No, I am smart about things. So yeah, I'm not. I don't think that I'm going to go into like, oh yeah, I think D.R. Horton. No, they're already at like this record high. You know, they've already priced into like the future of building. So I'm probably not going to go with a builder. My picks are going to be more along the lines of what are people doing, right? So I do, and I'm not going to buy lumber. Yeah, maybe. I don't know. Maybe I'd buy some lumber. You can convince me to buy lumber, but I'm sticking with my tried and true Wayfair because people need to furnish these new homes and they're not going to furniture stores to do it. I'm going with just that kind of basket of stocks that are already benefiting.
You see, I take you for like a Zillow or a Redfin guy, right? Because you love the tech.
I do love the tech.
It's consumer facing.
Yes.
Right? And so that's something that I could see Dave getting behind.
I mean...
But Dave loves the REITs, though. Aren't you going to say like residential real estate REITs?
I might be the only one that owns a residential MBS REIT right now.
I had a residential REIT when we saw that early market data that we thought everyone was going to not be able to pay their rent, and they got wiped out. But then the numbers came back that people were paying the rent, and they came roaring up, and I made money there. I'm not so sure about I don't think that people are going to be able to continue to afford their homes. So I'm kind of staying away from the REITs. I think that, you know, the builders are going to build the houses, but then once they've built the house, is that homeowner going to be able to, even with record low mortgage rates and they're paying less per month for a bigger house than they would have normally had because they're moving to an area that's cheaper outside of the center of the city? I'm thinking that people might be stretching a little bit, and we don't know what the actual world economy is going to do and domestic economy. So I'm staying out of REITs, residential and commercial.
Okay, so you want to just tell us your actual picks? Like, what are your actual picks for this? Just call them out.
Wayfair. They got all that I need.
Wayfair. You love Wayfair, man. You love that Wayfair. You can't get enough. Hey, man, I'm in it too.
I mean, Chris, you've been at the house. I keep thinking I need to do something, and I never actually pull the trigger and buy something from Wayfair, but a lot of people do. I have different tastes when it comes to furniture.
Did you guys get that text the other day, right?
Oh, actually, you know what? I bought something on Wayfair. It hasn't come in yet because it's back ordered, but I bought a new desk because this one is a little too big for the space.
Dude, well, you got a new desk. We bought a $450 rug. It was the wrong color. Wayfair said, just keep it. We'll send you another one. We sold it in like 2 hours in a neighborhood like Facebook group for $250. And then they sent us a new one, wrong color again. They said, fine, we'll refund you for the whole thing. Just keep it. It's too expensive to ship it back. We sold that for $250. Now we're up $100. My wife finds the actual rug on another website for $400 even. We ended up making money made money on this and got a free rug out of it. But yeah, Wayfair needs to get their stuff together. Something's going on with their inventory. That, as a shareholder, doesn't make me feel great. Yeah. But maybe they're making so much money they don't even care right now. Who knows?
I mean, they don't. They care about top line revenue, and the fact that they gave you your money back is probably not the norm, right? They don't care if they have to ship the same thing 4 times. As long as they got paid for it once, it shows up as revenue.
Okay. All right. So Wayfair
that is my go-to housing play, because I just don't really love anything else.
All right. Fine.
All right.
Well, let's
Jordan.
Let's get something even more. Jordan, could you find something even more? I mean, Wayfair's not.
Wayfair's not conservative. I mean, really not. I'm also in restoration hardware, because personally, that's more like I have more things. I guarantee you, I have more things from restoration in my house than Wayfair. But that's it.
Yeah, but Dave, how much did you pay your designer to design your house? Mid-6 figures, though.
I'm embarrassed to say, but I'll say I'm completely transparent about everything. The budget for my furnishing this house was $250,000, and I went over budget.
Less than I thought. It looks like at least a $500,000 job to me.
That was my budget, job. But that I went over because everything in my house is designer.
All right,
and
Jordan,
that doesn't include art.
Tell us the conservative way to play this. Go ahead, give it to us.
Yeah, I mean, I own some of my favorites, Home Depot and Lowe's. I own a REIT. I own Annaly Capital Management, which is an MBS REIT, which is paying, by the way, 12% right now.
And there are some high yielding REITs out there. I do get you on that.
Is it a risk? Maybe. It's trading under. It's trading under the asset value, right? So it's trading like 85 or 90% of the book value. Is there some risk there that if stimulus drops out, that you're going to see delinquencies pile up? Maybe. But I can just sell it at any point in time.
It's also a nice
kind of how I'm playing
trade,
it,
right?
What's that?
It's a nice stimulus trade. So if we do get that stimulus deal, that thing will come up quite a bit, I would imagine.
Yeah, for sure. So it's a good one. I'd like to be in some of these home builders. They've taken a huge run so far, and they're sitting at all-time highs, like Lennar and D.R. Horton. I'm not playing the lumber deal. Highs. I know you're probably looking at that more than I am. Yeah, that's how I'm playing it right now.
All right, man. Well,
I guess slightly with like Home Depot and Lowe's, because they would benefit a little bit from lumber prices.
They benefit from people needing to do things around the house too. So I mean, for different reasons, I like that. I'm not invested in Home Depot or Lowe's, but I do like those. I was just pulling up some data here.
All right, so Jordan, I do also like Home Depot and Lowe's, and I'm in both. Okay, and I'll give you that. I'll take a look at that. I'll take a look at that REIT. But what I think is really interesting, you might think I'm crazy. I do kind of like the lumber companies. I haven't bought them yet. So there's 2 of them. There's Weyerhaeuser, WY is their symbol, and there's Rayonier, which is RYN. And the interesting thing about both these lumber companies is they both also manufacture their own lumber. So they own the land and they own their own manufacturing facilities. It's really nice. It's a really nice complementary thing to where they reduce their costs dramatically, and they're able to be a low-cost provider of the lumber because of that. My bet is on real estate and the housing boom. And if you get a housing boom, I think the housing boom is going to be focused on lots and lots and lots of cheap houses. And that requires continued lumber. So I think lumber has a really nice tailwind, and I love investing in sectors that have massive tailwinds, okay? And if Joe Biden gets elected, I think that will just accelerate, okay? Also, I actually like some of the individual home builders, even though they are trading up significantly from where they were a few months ago, but so is Tesla, and so is Peloton.
But I feel like Tesla is more of a game-changing, life-changing industry, and building homes, they can only build so many.
Let me just say
they're going to run out of lumber. They shut down the lumber for so long when the pandemic first started. That's why the prices are up, because they weren't producing.
But the lumber companies haven't come up that much. And when it comes to home builders, guys, I think that this is a multi-year housing boom run that we're potentially about to start with all these people that have been cooped up in cities. Now they appreciate the concept of having a yard and a neighborhood. I think there's going to be a massive amount of demand coming into this market the next 24 months. I think the home builders that are capable of making cheap homes, especially if Biden gets elected, he's going to subsidize those mortgages to get in those cheap homes. So if you look at D.R. Horton, they have an express product, homes as low as $100,000. They're perfectly positioned. I bought some of them this morning, okay? I also bought, in addition to D.R. Horton, I bought, where is the company I bought? Oh, LGI Homes. Okay, LGI Homes is interesting because they have a massive amount of real estate and home building in the South and in Texas, where I think the vast majority of this influx of people moving and buying homes is going to come the next 2 to 3 years, okay? So I really like the geographic positioning of LGI. And on KB Homes, KB is fascinating because KB does a lot of solar stuff in their homes, okay? They're all about marketing to the millennial Gen Zer. So KB has a really interesting, I think they have a really nice niche that's going to be really well positioned for these new home buyers the next couple of years. They're going to take advantage of all these government programs, okay? So I bought all 3 of those home builders, even though they are high. I agree. They are a little high, okay, guys? But in addition to that, I love my Beacon Roofing because you can't build a home without roof tiles. You can't build a home without insulation, which is a company they acquired last year. You can't build a home without siding. Well, you can, but a lot of these cheap homes are going to have siding that Beacon Roofing sells.
And it's hurricane season,
hey,
and they also benefit there.
Share price looking like right now? That's an interest. I agree. I like Beacon.
Yeah, I like them. Of course, they doubled in the last few months, but they had never been down that low in years. So it's like they're back to kind of a semi-normal level. They have a lot. This stock, Beacon can move. Beacon can move in a housing run, okay? So I love Beacon. I love Home Depot. I love Lowe's. I like those 3 home builders because of the way each of them are positioned. I would want to double down on low-end homes, not high-end homes, although, D.R. Horton kind of plays across the field.
Now, so far, what we've seen is median home prices rising, and that's because more expensive homes are moving better than lower-priced homes. So just to kind of set the expectation of what's been happening so far, you're thinking that the election could then push that lower-price home higher.
I think it can, because I think a lot of people, we have this natural migration, Jordan, of people moving from apartments to homes, right? And I think we've had a stalling of that this last year, right? So I think once we get out of this period, there's going to be a lot of people. And by the way, guess what's going to be really expensive to do starting next year? Travel. We all think we want to travel, but it's really expensive to travel next year. Could you imagine how much it's going to cost to get an airline ticket once the whole world opens up again? How much hotels are going to charge? And a lot of people are going to make the decision, well, we can travel, but we can also buy our first home. Biden's giving us this great subsidized, the mortgage rates are low. They're keeping them low. The interest rates are low. Everything is set up. D.R. Horton's building a beautiful express home for us for $100K, right? I mean, I think a lot of people are going to get excited about that. But
they are. And because the inventory is down 20% from last year, and first-time home buyers up from last year, that accounts for 34% of all home sales is first-time home buyers. And they're buying the starter homes that D.R. Horton built.
The only thing that concerns me about this is that those lower-end homes tend to be further away from city centers, where a lot of the lower-paying jobs are. Isn't it better for some of these people to have less of a commute, be in an apartment, and
no, because there's no more commuting, Jordan. That's what you're forgetting.
Yeah, there is no commuting.
No, you're missing it, because these people aren't working from home. They're not in a tech job. They're working at a restaurant or just normal jobs that don't benefit from some of this. That's why the high-end housing is moving, is because the work from home trend is for some of these higher-end jobs, like computer programmers, engineers, architects, stuff like that. People that can actually work remotely.
But how are they paying for these houses? We need to talk about that other aspect. Are the mortgage companies, are the banks, are they going to kill it? I've been staying away from the banks right now completely, but is there something to think about with the mortgages?
There is, and that was my last pick. And by the way, Jordan, there's 65 million people in this country that cannot afford a home at under 250K. So I think this new concept of really cheap homes, even though you're right, it's not the type of person we're talking about that's flush with cash, is about to be a little flush with government cash and government subsidies, right? And an incentive. The government's going to say, go buy a home. We're going to let you. Biden's going to be all about, I'm going to get you in a home, okay? You could be 40 years old, 50 years old. I'm going to get you in your first home right now. That's what he's all about. Whether it works or not, I don't know, but I think the market is going to have a perception it's going to work. Dave, I like the mortgage companies too, and I spent a lot of time thinking about this, and I had to make a decision. I wasn't going to buy two. I was only going to buy one between Rocket and Mr. Cooper, and that was kind of my thing that I've been working on this week, and I did make a decision yesterday.
Well, and that's why we need to definitely put those two head to head to decide, would you rather? So let me get ready to do a new segment called Would You. I didn't even move I'm so bad at producing this show. Okay, so I need to move the ticker over. We already talked about housing boom. Now it's Rocket versus Coop. Okay, so let me just get everything set. Sorry, guys.
I'm so excited.
Today on Dumb Money, it's a battle between two new-style mortgage companies. Would you rather invest in Rocket, the turbo-boosted, robot assistant, instant approval mortgage app, or would you rather hang out with Mr. Cooper, where instead of online rates and digital applications, you talk to a human loan officer on the phone? Think about it. You can only pick one. You have to pick one. It's time to play Would You Rather. All right, here's how it works. We're going to put two investments head to head. We're going to talk about each of them and then decide which one we think makes the better investment. We each have to pick one. We don't have to agree. Chris has a crazy high risk tolerance. Jordan doesn't want to lose $1. And I'm very pragmatic about investing. We don't expect that we're going to agree on much, but in less than 10 minutes, you'll know exactly which of these two stocks we think most deserves our dumb money. It's Rocket versus Coop. And first up, Jordan, which one are you? I'm guessing you're hanging with Mr. Cooper?
Well, I'm going to talk about Mr. Cooper. So Mr. Cooper is maybe not the original SPAC, but they were doing SPACs before SPACs were cool. So they did a SPAC back when they were Nation Star Mortgage in 2016. They are a small cap non-bank mortgage originator. They're probably like they're in the top 15 of mortgage origination. So they're not huge. Market cap of like 1.6 billion, something like that. But they are also a mortgage servicer. But they rebranded to Mr. Cooper.
Are they still operating under a couple of different brands?
I think they've got the XOME or something brand, but that's not their mortgage side. It's
Washington Mutual reborn. It's literally Washington Mutual. This is the old Washington. That's why they're so big.
Yeah, well, look, I mean, here's the bit with them is that and this is what I don't like. So to be able to get a mortgage, you have to actually talk to somebody or have to email somebody. So you got to fill out a form. They don't have an automated technology process. So that's probably my biggest beef with them. But as far as like value is concerned, I mean, they do $2 billion in revenue with a 1.69 billion market cap. So I think there's opportunity there.
And they originate They're the number 3 loan originator in the world, right? Or in the country.
No, they're not. No. They're top 15 mortgage originator, but they're the third largest servicer of loans.
Servicer, Dave.
Okay.
Yeah, servicer.
And so they've got a lot of technology around their loan servicing, but just not around origination.
They are the big monster old school Washington Mutual loan servicer. They service all the loans. It's just like a bunch of back office.
Right.
They had the worst reputation ever. I mean, their reputation was so bad that they had to rename the company. And when they did that, they hired a really cool marketing agency, it sounds like, and came up with a sweet name. Like the best thing they have going for them is that sweet name, Mr. Cooper. Like who would think it's an old nasty company that doesn't even understand technology? Like somehow like Mr. Cooper is a cool.
As soon as you go to their website though, because I actually, in researching these two, the first thing I did was like, well, what if I wanted to refinance? What's the process? And their website had no information other than click here to get started. No. And then they wanted just my name and phone number.
It's basically a lead form. Their website is a lead form.
Yeah, that's all it is. Right? There's no technology.
It's like they made that technology in 1998, and then they just kind of let it.
They're a new school mortgage company or new school name mortgage company, just running an old school business.
But you have to believe that they're gonna go through the Rocket model and have an all online application process at some point.
Maybe.
Sure, and who else wouldn't? I mean, there's 800 other companies that are trying to do that now. would we even be talking about Mr. Cooper if they weren't called Mr. Cooper? That's all I want to know.
Well, no, I mean, the only reason we're talking about it is because there's not many public non-bank mortgage originators. So if you're going to go, any other public company is a bank that does this stuff, and so you're getting mixed in. So this is like a pure play on mortgage, right?
Generally, when we think about pure plays, it's like they're lighter companies that can move quicker, that don't have like those old school processes and work like cultures. This is the opposite. This is like technically a pure play, but they're a weird offline pure play, which is like I think that
once you actually get past that initial application, they do have some sort of a digital platform. It's just you can't even get to it because they don't even let you start the process.
Well, I think so. Like I said, they're the third largest servicer, and I think their servicing platform is pretty advanced. Like I don't know if advanced is the right word, but like feature full, right?
Legacy.
I mean,
large legacy platform.
Yeah.
So, Chris, that means you're taking the other side of this one, or at least explaining the other side of this one. And is there really much? Is there much like? I think we kind of know which one we're going to bet on, right? So, tell me about rocket companies.
Let me take you on a journey from 2005 to 2020. Rocket Mortgage, an actual technology company. A hype company, the hype company in mortgage, if there ever was such a thing, okay? Like, they are a technology-first company. They have basically streamlined the process of applying for a mortgage, no bank involved, right? Totally on the fly, really good customer service. It's all about brand and process. I love it. I love everything they're trying to do at Rocket Mortgage. They're Quicken. The same way that Washington Mutual was Mr. Cooper, is what Mr. Cooper is today. Quicken, which is also kind of a digital company, a little more savvy than Washington Mutual, I must say. My wife used to work for Washington Mutual in HR back in the day, no offense. But Quicken knew what they were doing, right? They didn't just give a name to this like Rocket Mortgage. It is technology first. And they're starting with mortgage, but they're not ending with mortgage. They're doing car loans. You know, they have Rocket Home. They're going to be doing all kinds of loans. And they're a true fintech company that is developing the first front-end monster brand, consumer brand, using mortgage as the front gate to suck people in with relationships, right? And because they are a originator, they are like the #1 originator, I think, one of the top originators right now in North America. They are so light, they know how to market, that if you believe, and I think we do believe, that there's about to be a home boom, Rocket Mortgage is perfectly positioned, potentially, to take advantage of that because they're light, they're originator, they don't hold their loans, okay? They sell all their loans, so they don't have any interest rate risk on those loans. They don't have any default risk on the loans that they originate. So if you just want to go, I want to play the home boom with the mortgage company, I want them to be light and technology oriented. And the best part about Rocket Mortgage, I think, and I'm not telling you which one I picked out of these two yet, but
yeah, you have.
But the thing about Rocket Mortgage is they are a hype company in a hype market that I think will continue to be a hype market for at least the next 12 months. Okay, guys? And Rocket Mortgage is exciting. Listen, we have our Discord group at dumbmoney.tv/Discord or something like that. Is that what it is, Dave? And that's all they all love talk about Rocket Mortgage. I'm like, what is this Rocket Mortgage? Why is it so hype? It just is.
Because it's a tech company. And, because it's not a mortgage company. It's a tech company that is improving processes. And so the way this game is played, we each have to pick a winner. So I will just let you know, I am definitely picking Rocket. So as a user, anytime I'm able to do something myself without having to talk to a human, that's what I'm going to do. Instead of going to a grocery store, I'm going to order on Amazon. Instead of doing anything, I'm going to be doing it on Amazon, but Amazon doesn't sell mortgages yet. And until they do, I mean, the traditional experience, I've done the mortgage thing multiple times and it is just painful. You have to basically walk through on the phone telling someone all your thing, and then you have to gather up all your documents and like PDF them all like statements and then email it, and then they give you this stuff you have to fill out, and then sometimes they'll fill it out for you, but then you still have to go somewhere in person and sign and the stamp, and it is such a backwards old school way of doing things that Rocket changes that. And like I said, I went through the process just to see what it would take to refi my home, because I heard someone some other YouTuber said that they basically were able to do a mortgage while watching TV. They just filled out the things, and it was that easy. I got to the step where they wanted my social and were going to pull my financials, and I was like, I don't really want to refi. I don't have a mortgage even, but if I did, I would be getting it from Rocket. So I'm betting all in on Rocket. Chris, I'm guessing we kind of know which one you're leaning towards too.
Well, you know what? Let me tell you something. Here's the thing about Mr. Cooper. If Mr. Cooper, the reason why Mr. Cooper is trading at such a low PE right now is because people are worried about people defaulting on their mortgages and or not paying their mortgages, and then the mortgage handling fees that that Mr. Cooper makes all of its money on is at risk. If I see a stimulus deal happen, I'm actually going to buy Mr. Cooper. But we don't have a stimulus deal yet, so I bought Rocket this morning. I think this morning or yesterday. I bought Rocket. I own it now. I'm proud to own it. But know what about this one thing about Rocket? Rocket must continue to rocket to grow that stock because it's richly valued. People have high expectations for Rocket. They got to keep crushing those expectations. I think they just might do it, at least for the next 12 months. I own Rocket. I might own Mr. Cooper too if we get a stimulus deal.
And Jordan, what about you? What have you done, or what are you thinking you're going to do?
Here are my thoughts on Rocket. Right. So what I like about them is exactly what Chris said. They really don't have the risk. They've got all the upside on originating these loans. Right. So they get those fees up front, and then they don't have to worry about anything after that. They're also a solid growth company. I mean, they have rocketed from being a 1% of mortgage origination a few years ago to now they're at like almost 9% early this year of mortgage origination. So they are growing. But like Chris said, they're also, they've done about $5 billion of revenue in 2019, but they're valued at $54 billion. So that's 10 times revenue. So they are very richly valued. So they've got to keep growing it, I think like 10 to 12% a year to be able to justify this valuation. So if they can do that, man, I think Rocket is a really good company. But I think the better investment here is going to be Mr. Cooper, because you're not paying that premium, right? And so I think you've got live risk on Mr. Cooper, and surely they'll do something to figure out how to get this application online and be able to grow that revenue a little bit more on the front side.
We all knew you would pick Mr. Cooper, Jordan. We all knew it. I knew it. I knew it before you even started talking.
No, he sounded like he was leaning towards Rocket. I'm actually shocked.
Would you rather hang out with Mr. Cooper or hop on a rocket? Okay.
Do you remember that show, Hanging with Mr. Cooper?
The deal with Rocket, I'm going to say it. I like Rocket as a company more. I just think that the better deal for an investment is Mr. Cooper right now with the valuations of the way they are.
So, in the battle between Rocket and Mr. Cooper, our final results, Chris and I are riding a rocket ship, and Jordan is hanging with Mr. Cooper. You guys remember that show?
Love that show.
I think that ages us. But what about you guys? What would you rather? Let us know in the comments and the live chat if you're watching us live. This is Dumb Money Live, and that was another Would You Rather. That was fun. I love doing Would You Rather. That's probably my favorite part of the show.
Do you know why, guys? Because it actually forces me, like in my research for this, I was going back and forth for a while. I really was. Like I was going back because they both have good stories in terms of an investment, all right? And you have to kind of pick one, and it forces you to kind of pick, the better of the two if you have to make a decision.
It wasn't a hard decision for me on this one though, just because one of the companies was just. All right, we've beaten that one to death. We can now talk about, and Chris, I'm just so intrigued by this news that you have, this thing that you're going to be a part of. Just explain what it is.
Okay, Dave. Before I do it, 'cause I might not have another opportunity to do this because once I start talking about this new thing, this old thing is going to be truly old. We've been giving away my books for free. I'm mailing them to you for free. My buddy Patrick's mailing them to you. We have 600 left. Okay. All you have to do, if you want this book for free, it's 10 years old, it's a $30 book, it's yours. What's the link, Dave? dumbmoney.tv/book.
Right? That's all they have to do. You're so like old school. Do people say forward slash anymore? It's just slash.
I don't know.
Do you still say number sign when you're hashtagging something?
I don't know. But you have to, this book is kind of old. It's 10 years old. You have to live in the U.S. If you live in the U.S., we'll mail you one literally this week and you'll get it. It's this book is so much to me. It's like my entire life story. It's how I turned, what, 20,000 to 2 million over 3 years.
There's a link down in the description. You can get to dumbmoney.tv/book. Definitely go fill out that form and get one if you live in the U.S.
And Dave, once we mail these out, I will never mail out a free book again because I actually don't have any left other than like the 4 in my closet. So this is your last chance. But I'm
hoarding 5 in my garage as well too. So if we have like an emergency book need and we can't find one anymore because they are so limited edition.
All right, guys.
Tell me about. So this next thing is another book, right? But it's not your book.
It is. And so when I was a kid, I don't know. Would say kid or older kid. I remember reading Jack Schwager's Market Wizards book. And the thing I like the most about it is he actually audited the people he wrote about. Jack writes about the best traders in the world, the best hedge fund traders in the world. And he tells their stories about their methodology and how they achieved what they achieved. And so these 20 or 30 people that have been in his books, for the most part, some of them, have faded away over the years, but a lot of them are some of the best traders in the world. They manage billions, tens of billions of dollars, these hedge fund guys. Jack decided to do a book this year. It's coming out in November called Undiscovered. I should know the name of the book. Unknown or Undiscovered. I should know the name, right? Unknown Market Wizards. Okay. So is that the name, Dave? Is it Unknown or is it Undiscovered?
I'm looking it up right now. It's so brand new.
Unknown. Okay.
Unknown Market Wizards.
Unknown Market Wizards. And Jack spent years traveling the world looking for basically the 5 best equity traders that he could find who had a 10-year plus track record of extraordinary returns. He found me, and I'm so proud to announce today that my dream, it wasn't really a dream because I never thought it was actually possible. It's not something like, I'm going to be in a Jack Schwager book someday and be one of the top 5 traders in the world. So he spent months auditing my trading accounts going back 15 years. And he called me one day and said, Chris, you're going to flew out to my house, spend a couple days interviewing me. And it was such an amazing experience. I'm in the book. It comes out in November. I'm one of his 5 top 5 traders, self-directed traders in the world. And it is, let me tell you something, guys.
Congratulations, first of all, Chris. That is such like an honor because the people who have been in these, he writes these so infrequently.
Millions, right? I mean,
everyone who is in these are like the legendary traders of the era. And the fact that you're in the next generation of this book is just mind-blowing to me. Congratulations.
And thank you, guys. I appreciate it. But the coolest thing about it is he wrote this chapter about social arb trading that is better than anything. I could sit with you for a year and a half and try to teach you social arb trading. He sat with me for 2 years and in one chapter wrote he blew my mind how well he described social arb, our methodology in this chapter. So this is a book. I hope you all buy it. But he asked me to share this with you all today. It's the first time anyone's been invited to join the launch team for Market Wizards, Unknown Market Wizards. I think they're going to cap it at 100 people.
That's what it says, yeah.
So if you want to join the launch team, you will get access to chapters of the book before anyone else in the world gets. I don't know if it's I hope it's my chapter that he releases. And you have to agree to eventually, hopefully, buy a book and review it on Amazon. That's what he really wants. But he also wants you to promote the book on social media. And so there's a few things he's going to ask you to do. But you'll be part of this launch team for Jack's book, which no one even knows about this launch team yet. I think this is the first time he said, Chris, you can announce it on your show tomorrow. So I'm announcing it. We have a link, Dave, right?
There is a link. It's down in the description. If you go there, it's now on the screen with the live chat too. If you go there, you can, if you're one of the first 100 people, and I don't know if there's a selection process, but go ahead, sign up and be a part of this launch team.
There is a selection process, I think, but if you get in early and if you should qualify.
If you're at the top of the list, they know that that you came from Dumb Money, so you probably have like a little gold star next to your name.
But by the way, I just want to say, we don't sell anything here. I'm not selling Jack's book. He doesn't pay me. Like, this is just cool to be in his book, and I'm going to be a big part of promoting his book later this year. I'll be doing a lot of media for it, and I am proud to be in it, guys. It is. You know me, it frustrates me, all these guys on FinTwit talking about they're the greatest traders and just pay me $29 a month. I'll tell you how to be a great trader. I hate those people. I hate them so much because none of them are for real. None of them will let you audit their track record, right? I've contacted a bunch of them. They will literally ghost you the second you ask them to prove that they've done anything real in the market over any period of time.
And that's what that I think his methodology of auditing the people influenced you, that before you wrote your book, you had your history audited by an accounting firm, and you published that in the book. So that
he audited your audit too. So, but
the
other people in this book are pretty good too, Dave. It's pretty wild, the people he's writing about in this book. Anyway, that's it. I just want to let you guys know.
That is so cool. There's so much going on that I hope we have time to talk about more headlines. But there was a series of tweets that caught my eye yesterday that I just have to talk to you guys about, because it's my favorite guy of all time. He's the P.T. Barnum Tesla wannabe, Mr. Trevor Milton, the CEO. He's not actually CEO. He's actually just, I think, their executive chair of Nikola Motors. But I do have to give credit to Twitter and Jessica Meckman. Here's the tweet that caught my eye yesterday. And basically, she's not a journalist. She's not a financial analyst. As far as I can tell, she's like a photographer and a Tesla driver, and apparently not a Nikola fan. So, she and I would probably get along well. But she posted this, the SEC filing for the people who are awarded shares, like performance-based compensation. And basically, they've already qualified for all of their performance-based pay without actually making a single product. And she says it's their main compensation package vesting in 2023. As long as they stay employed, all the goals have been achieved. So for Trevor, that means a $250 million payout and $750 million for the overall exec team. So I went back and I wanted to see the rest of her tweets on this subject, because this kind of stuff just fascinates me. And apparently,
wait. So what? I didn't get to see it. What about Mark Russell? What's he going to make up of this? Off of this thing? He's the CEO.
I think it was like 500, like 50. I'll have to look. I can't zoom in on this screen, but I will.
Okay.
He's number 2, and I think Trevor has like 25% of the shares, and he has like half of that. So just
so a lot
of money. Yes.
Guys, this is part of the issue with SPACs, right? Because SPACs have less controls in terms of when you bring them public, and you could slide stuff like this in. I am fascinated by this. I'm fascinated by
Trevor,
this guy. I can't.
He's going around telling people that he is, he tweets this. He's taking this $1 a year salary for, PR purposes. But what he's not talking about is the $6 million a year that he's given in stock and 4.8 million shares that he gets granted by hitting a threshold, not based on any kind of sales, but purely based on the stock price. So also I saw yesterday.
Always be skeptical when a CEO tells you that, or a CEO or somebody in a position of power like that tells you they're taking like $1 salary. They're getting compensated in other ways.
So yesterday he tweeted that he is giving away 6 million shares of his personal shares to employees. And that got me wondering, how many shares could this guy possibly have? The day the IPO came out, the news was that he became an instant billionaire. He had a net worth that was increased by like $4.6 billion. So I did the research and found that he has, as best as I can tell from public filing, he has 92.2 million shares of Nikola. So in reality, all of this extra $250 million he may get in additional performance stock grants, really pretty small compared to the $5 billion he already has stock that's just sitting in his account that he can't technically sell right now. He has a lockup period, but that is exactly why the stock is so important to him. 92 million shares locked up. But, by the way, they've stated in their SEC filings that they are going to continue to incur losses basically each quarter until they have significant deliveries of their trucks, which is not expected to begin until 2021 for one model, 2023 for the other. Even if we are able to successfully develop and sell or lease our trucks, there will be no assurance that they will be commercially successsucessful. Like red flag, warning. But that, I mean, it's pretty common for public companies to have to disclose all of the risks.
Right?
Yes.
There's risk in everything.
But to get this extra money, he just has to keep the stock price up, both for the 92 million shares he has, and those 92 million, there's a holding period of 180 days for some of them, 1 year for some others, and they're not planning to actually make a vehicle during that time. So he could actually sell all of his existing shares before they make a single vehicle.
Dave,
right?
This is like a game of hot potato, and I'm holding the potato right now, willingly holding the potato. I don't think, I don't think this company is going to implode this year, and that's my hope at least. I think there will be some mega announcements between now and the end of the year. More stock collabs.
Collabs.
Yeah, more stock collabs, man.
So
and
people are comparing this though to Nikola is being always compared to Tesla, and nobody is more, this guy, Trevor, is the first to always compare himself. Well, it's just like getting into Tesla in the early days, but it's really not at all. But people compare this, this payment scheme to the elaborate one that we talked about that Elon has, but those are tied to actual operational thresholds. There's like 8 different revenue and earnings thresholds, and the company has a valuation threshold, like 12 different valuation market cap thresholds and 8 for thing. So their pay plan was completely aspirational. If Elon was able to hit those, it would be a successful company, because they actually have been a successful company, not just a stock pump. But Trevor and Nikola, on the other hand, they had a single milestone. The stock price just had to be above $55 for 20 days, which it did barely. So thanks to Twitter, we can see that little yellow box there shows that it was above just long enough to qualify for him to basically the entire exec team unlocked that $750 million of shares, and they don't have to sell a single product. They just have to stay employed until April of 2023.
Can I respond to Nathan Me? Says, is Chris holding Nikola still? The hell is this guy doing? Chris makes great calls. How is he making this terrible call? Nathan, I've told you guys so many times, I hate Nikola. I hate it with the passion. I think the company is going to likely 95% chance implode. I am holding it only because I'm in on the stock collab scheme that I think is going to play out over the next few months. And I think there's a better than 50-50 chance that these announcements that come out between now and the end of the year push the stock higher, not lower. But I don't like Nikola. I'm not going to be in Nikola very long, dude. Don't worry. I'm not buying into any of this. It's a hype play. And I do think he's going to have opportunities to manipulate the market between now and the end of the year, because no one's looking for him to produce a truck between now and the end of the year. So what can he do wrong, right? What can he do wrong?
He has a $1 salary, and he's not expecting to make anything at all until 2021. Again, their SEC filings, they can basically, the only value they're creating is their stock, right? They're not going to sell anything. And that.
Well, please, everybody know I don't like Nikola. I'm not a Nikola fanboy. I do not think it's a great long-term. That's not me. And by the way, guys, we're not financial advisors. We forgot to tell you that this show. We're not financial advisors. Don't do what we do, because our risk tolerance is totally different than yours.
No, I'm more of a conspiracy theory researcher than a financial advisor, and I'm finding when there's heat, there's fire, or whatever. They're not.
Dave, are you holding the stock right now?
I'm not holding the stock. No, I'm long Tesla only, and I don't think I ever bought Nikola, even just as a fun little day trade or whatever.
Yeah, that's all it is.
Chris can separate these things, and I appreciate that, and I actually fundamentally agree with it. I just can't do it. I can't. I can't buy it.
They expect to begin assembly of trucks in 2021 and to produce trucks in 2023 at the earliest. Does that sounds like they potentially could have something in 2021, but that's just, they're starting to piece the parts together at one factory in 2021, and then when the next factory, they're going to actually produce the vehicles.
Does it say which model they want to have in 2021? Is that the pickup truck, or is that the semi?
It's the semi it's like the shorter version of the semi on their website. It's like the third one over.
Maybe, our Hewlett Packard play, maybe Nikola is supporting that using all the, you know how much colorful ink they're using to kind of put out their graphics to all their vendors, right? I mean, that's all they're doing is printing pictures of trucks these days.
Do they even print them though? No, they just put them on the internet so people can
they
see
do. They do really nice photoshopping, and someone has gotten really good with video, because I've seen like really nice renderings of their trucks driving down the road that look photorealistic. They have hired the best when it comes to like special effects. I'm sure it's, nobody's making movies right now, so they're all just animating Nikola trucks.
Dave, before we get into our premiere, guys, you got to stick around for this premiere because it's the best video segment we have ever put out at Dumb Money. It's going to blow your mind. But before we get into that, I forgot last episode to talk about the new IPO that I bought into, and I want to talk about it just for a minute here. I did tweet it out to a couple people that asked me after the episode was over. Vital Farms, right? I invested in an egg company, Vital Farms. Why did I invest in an egg company? Well, I really believe that this company has the right mindset when it comes to connecting with change in culture. And when I think about the next generation of consumers and how they view this product category specifically, it's all about having trust. All right, they've seen the movies, they understand how terrible it is when animals are mistreated, and there is a trust that this company is developing with their consumer set that enables them to make 2 to 3 times what other egg producers make for their eggs. So egg margins are really small, but for Vital Farms, they're able to get a super premium on it. And what's most important about that is it then allows them to move into different product categories. I think they make the egg bites at Starbucks, okay? They have bacon in them, and they actually have like bacon and cheese in the egg itself, you microwave. So, and they're now selling those direct to consumers. They're getting into other areas, other egg-related areas. I think they have right now like 3% of the egg market, but they have the best positioning at Whole Foods, the best positioning at all the grocery stores that they're in. They're developing really strong connections with their customer base. And listen, I don't know how big the egg game is this next decade, but I do think that Vital Farms, you could make a case that, they're valued a little high, they're a little hype for an egg company. But I think they're going to dominate the egg space.
Hey, it's not just eggs. They also make butter, right?
Butter too. I hear
I'm a customer. I buy their eggs. I don't buy their butter because I'm a Kerrygold guy. But their eggs are really good, and they've got these little notes from the farmer inside each 6-pack, which is.
Here's the thing, guys.
I read them.
I love investing in a category I think is going to grow, and when it comes to, this is not the overall egg category, but this is the kind of naturally, millennial-friendly egg company in terms of the way they treat their product and the growth of their product. I love investing in companies that are leading in their space and innovating and taking charge, whether it's Tesla or whether it's Peloton or any of these other companies that we talk about in the show. In a weird way, this really is that company for eggs, and I want to have a piece of that growth, right? I don't know how big of a deal it's going to be over the next decade, but I like the risk reward. So I'm invested in Vital Farms. They could go up or down in the short run. I don't even really care. I want to have a piece of that company. The same way I have a piece of that cauliflower company that we invested in, Jordan, that's still private.
Yeah, I will be buying me some Vital Farms, and it actually just dropped a little bit today, so this might actually be a really good time to buy it.
Yeah. You're a customer too, right, Jordan? So
I'm a huge customer.
Yeah, I think they're going to expand. Their brand is amazing for an egg company. Okay, like amazing, and I could see them doing massive expansion, maybe even beyond eggs over the next few years. And by the way, you know how they work, Jordan? They just have like 200 local farmers that do all their stuff. They're constantly adding new local farms all the time.
But that's the deal. Really cool. They put the note in from that local farmer, and like how that farmer. It's great.
So cool.
Hey, question from Pedro. Have you guys looked into the IPO for Lemonade? That's another one that is affected by this housing.
Pedro. It's on my list, Pedro. I bought it for a minute and sold it because I didn't have time to do my research on it. And I know of the company. I just haven't done a deep dive, and I'm not comfortable investing until I do my deep dive.
That's what I've been wanting to look into. Also, my cursory glance looked like it was a little expensive, but I think everything's expensive. So,
but by the way, can I just say something? Have you ever, in the history of CNBC, heard Jim Cramer, when someone asked him about a stock, go, I don't really know. I haven't done my research on them yet. I'm sorry. I'm going to have to get back to you. I need some more time to do research because I really can't provide a qualified opinion on that. Has he ever said that ever? You know, like
he knows about every stock just instantly,
right?
Regardless of how obscure it might be. That's what makes him a professional, Chris. That's why he's been on TV for as long as he has. So I actually don't know what we're doing right now. I logged in and it looks like that the printer episode is ready to go, but it's not scheduled as a premiere. So I'm not sure if there's some reason that have you heard anything from the team that was uploading that?
No, maybe it was just,
am I supposed to
I don't know.
turn it on?
Should we just...
Did they think that there was no way we were going to stay to an hour and that the premiere would happen while we're still...
Are they watching right now? We could ask them to do it.
I don't know.
I thought they watched.
I hope they're watching. I hope they are.
So what should we do, Dave? Should we just run it as an episode right now and tell people to go over and we'll watch it?
They didn't have a thumbnail, so it looks like they just uploaded a thumbnail. This is great. I was wondering why the thumbnail was just a picture of you like this.
The money.
So I'm going to wait for confirmation. If someone wants to text one of us and let us know that the premiere is scheduled, maybe let's just like try to do it at 12:30 because we can keep talking, right? Or
no, I can't keep talking, Dave, because So Dave and Jordan have rightfully been beating me up because I'll just talk forever and I'll talk over them, and like I don't know when to stop. And the reason why is because I spend so much time, guys, researching these investments. Like when we have an episode on Thursday and the episode's over, I take a few hour break and I go in my hole for 2 or 3 days, and for the most part do nothing but research investments, a lot of them for the next show, right? And so we get to the next show and an hour seems like a lot of time, but it flies by, and next thing you know, it's 2 hours and 2.5 hours. But I really tried this episode to not want to talk about too much, so I wouldn't be tempted to go past our hour. And we did it.
First time ever. We stayed within the hour. I'm so proud of you, Chris.
Right? I'm proud of me too. Oh no, hurricane talk. Let's talk about the hurricane.
Yes. Yeah, Kevin Kaufman's asking about the hurricane talk.
Is it a hurricane if it lands in the marshland where nobody lives? And I know there are people that live down there. And
people that live there. It's just not a city center, right? And so the biggest threat, I guess, is storm surge across that coast in New Orleans, right?
But what investable companies are based there or would be affected by that marsh being affected, or what is there anything that we? Well,
that would be on the downside, right? And so Chris, weren't you looking at? I'll let you talk about it. You were looking at refineries, right?
Yeah, I already sold out of that, man. I'm out.
Yeah.
It was actually it was a ETF.
You were in a one-day gasoline trade, right?
So one-day gasoline trade. I was in. I lost a little bit of money. I'm out. I didn't research it very well. No, I'm out of that, guys. I'm out of that. By the way, someone asked me, "Are you still long Vista Outdoors, VSTO?" Absolutely. I know it's been coming down some. I really, really like this gun trade, right? The ammo trade. I'm seeing more momentum in the last week, obviously, around the gun trade, and I think that will come around and help be yet another tailwind for Vista Outdoors. I mean, that stock just flew so high so quickly. There's no way to know who's selling it off right now.
I sold it off. I contributed to that downward momentum of Vista. I'm out now.
Yeah, that's fine. I get it. I'm out. I'm in still. And part of the reason why I'm in is one of those stocks that I want to transfer into my charitable foundation that I'm opening any day now. I'm waiting on the paperwork, and I got to get the account set up. And I don't want to sell the stocks. If I sell the stock, Dave, I have to pay massive taxes on it, and that's less money that I get to put into the charity. Yeah. So it stinks, but I'm just gonna I'm gonna hold out on it right now. My gains are like crazy on that side. It's like 150%. It's wow. Disgusting. Yeah. So no, there's some other stuff here. Oh, we're talking about SPACs. There's Tattooed Chef. I want to look into Tattooed Chef. That is definitely one that I thought was interesting, and it's on my list, guys. Donnie, it's on my list. I will look at Jordan. I feel like that's one that you should look into too.
I'll look into it. I've actually never even heard of this, so I need to figure out what they do.
Can we talk about, one of the other big things that we kept talking about was the comeback of sports and online gambling and all of that. And now that the NBA, WNBA, MLB, MLS canceled all of their games and this boycott, how long could that happen? Could it affect our big investment in GAN?
Yes, it could. It's not awesome for GAN, but remember, GAN, even though there's a perception that they're reliant on that industry segment of sports, they're really more about the casino gaming. So yeah, they do get impacted, but not as much as like a Penn does. And what I've said was I want to get out of my Penn when I see the first sign falling apart. I wasn't quite prepared for sports to fall apart because of this, though. I thought it was going to be a pandemic situation.
Yeah, this came out of nowhere, right? I mean, at least for me, I was really surprised by some of these announcements.
I was kind of shocked. I saw it last night. I was shocked that it actually happened, but now that it's happening, I'm kind of trying to figure out, Jordan, do you think does this happen now in football? I mean, do you think this transfers over to football or no? Like,
and I don't know. I mean, there's so much money to be made in football that
I mean, there's a decent amount of money to be made in the NBA playoffs.
I mean, I don't disagree. I'm not a big basketball fan, so I'm not like as invested in it. So I'm like, eh.
Yeah, I mean, listen, if the Mavs would have won this week on that game 5, I'd be really upset right now. But now that they're losing 3-2 and might get booted out this week. Anyway, I'm kind of like, maybe delay this a little bit, or if they end it, the Mavs didn't really lose anything.
Wait, so are they are they shutting the whole thing down completely and are they gonna bring it back?
They've talked about it, yeah, potentially shutting the whole season, just like saying we're done.
Yeah,
let us out of the bubble.
Yeah, because all I heard was that like maybe the Clippers and one other team bowed out, but I guess it's getting bigger than that.
Yeah, I'm going to keep an eye on it because I might need to sell my Penn at least temporarily if it seems like sports is going to fall apart, because the Penn should come down significantly if that happens, and then I'll get back in Penn. Okay.
Just so you know,
yeah, Livongo, we're still in Livongo. Yeah, that's a long-term deal.
Little programming note: I found out that we are going to premiere the printer episode and the sustained spike, doubling down on printer stocks. We're going to premiere that right at 12:15 Central, so 2 minutes from now. So you can stick with us here, and then we'll let you know when you need to jump over to there, because this has more explosions, more. It's kind of amazing. You get to see screaming children.
But by the way, Philip, I can't move it into the Charitable Foundation because it's not open yet. Like the Charitable Foundation is, I'm
Chris,
opening the account now.
When are we going to get that Charitable Foundation going? Because I also have some stocks that I would like to donate to charity.
I'm sorry, Dave. I'll give you the contact info. You can get yours set up in 5 days. I just have to open the brokerage account with Ameritrade. I haven't done that piece yet, but I actually have the paperwork filed. It's literally an email that you send to the guy, and I'll have it set up for you in 72 hours.
Sweet.
And you're good to go. You need to have 3 directors on the board.
You want to be on my board?
Both of you? Sure. Well, I don't know. That's kind of risky. Can I trust you to just be responsible with this stuff?
Are you kidding? I can't think of anyone more trustworthy.
That's so great.
Anyway, dude, this episode, who would have thought that my favorite Dumb Money episode, related to stocks, would be a printer episode? I really hope this printer trade works out today. It's not a high conviction trade, so I don't know for sure that it will, but I would really like this one to work out because I love this segment that we're about to premiere so much that it would be a shame if this lost money for everybody and me. Right? And we have such a beautiful segment for it. So
yeah, but guess what? why am I always the naysayer? I was out on this whole idea of printers because I don't print anything.
Yeah, but it's not about you. It's about the people. We've said it. It's not the people.
It is.
And people, not everyone is like you, Dave, because you are an anomaly, as am I in a weird way, but it's, you got to get in the mindset of the people. I don't like what my trading account has done since we started this show, by the way. It was such a good morning when we started. What has happened over the last hour? Is Piton still up, or is that even coming down? That's coming down. Oh man, this is a bummer. It's a
How
bummer.
much money did you lose while we were on TV here today?
400.
Ooh.
Well, I was up 200. Now I'm down 200. So $400,000 swing during the course. This show cost me a lot of money. No,
that should be the title of our show. This show cost me $400,000, and it cost me $62,000.
Oh.
And I'm not nearly as aggressive as you are.
Yeah, it is what it is. Are we starting this thing, man?
We're about 2 minutes away. Yeah, they just started their little countdown clock.
When you turn over to our other YouTube channel, guys, to watch this premiere, can you please give us a thumbs up? We really want to try to promote the old channel because we're going to be doing a ton of these fun episodes. They're really short. Guys, I promise this one's going to hold your attention from beginning to end. It's like 9 minutes. The graphics are insane. I'm so happy with the editor we're working with, Jordan 2. We'll call him Jordan 2. He's awesome. So we got a minute 40.
We have a minute. So what else? Like I saw, like I can just pull up my Twitter because I was retweeting this morning. If you guys follow us here's where you can follow us on the Twitter. Our name's on the screen there, at Dave Hansen, at Chris Camillo, at Jordan_McLean. But did you see 25% of U.S. malls, there are 1,000, they're going to go dark within 5 years. What happens next? Converting industrial... Have you seen, like, Amazon is turning, JCPenney stores into distribution hubs? That is smart.
By the way, if they let you just drop your package off there for returns, it might get people to go back to the mall.
Well, that was the whole deal with Kohl's, remember?
That was the whole Kohl's thing, right?
Kohl's was trying to reinvent itself by purely being a mailboxes, etc. or UPS store. So we're just we're actually getting close. We're about 30 seconds away. So that is going to be it for today. Thank you guys so much for watching, and please go over to Dumb Money, the original channel, youtube.com/dumbmoney. Click on this video, doubling down on printer stock in 2020, why we're investing in HPQ, social signals. Thank you guys so much for watching. We are Dumb Money. We will see you guys on, what day is today? We'll see you on Monday.